If you're holding XRP, this might be the most important video you'll watch this year. Because the truth is, most investors holding XRP right now are making a mistake, and they don't even realize it. Not because they picked the wrong asset, but because they're looking at the right one through the wrong lens. Welcome back to Crypto Equation, where we separate emotion from logic and uncover what's really happening behind the scenes of the financial world. Today, we're not here to talk about hype. We're here to talk about clarity and why understanding XRP's structure, purpose, and timing could be the difference between walking away too early or being part of a generational wealth shift. Let's start with the biggest misconception. Most people holding XRP think this is just another crypto project waiting for the next bull run to pump its price. They watch Bitcoin move, hope altcoins follow, and assume XRP will ride the same wave. But that's not how XRP works. This isn't a coin-chasing retail speculation. It's infrastructure for the future of finance. And that's the first mistake, treating XRP like a speculative asset instead of a structural one. Ripple didn't build XRP for hype. They built it for utility, to move value across borders faster, cheaper, and more efficiently than anything before it. It's not here to compete with meme coins or DeFi tokens. It's here to replace a system that's decades old, slow, and painfully expensive. But because most investors still view XRP as an ancient cryptome rather than as a bridge asset, they expect it to behave like other coins. That's why they panic during consolidation. That's why they chase pumps in other projects. And that's why they risk missing the moment when XRP finally activates at scale. The second mistake is impatience. XRP isn't moving slowly because it's failing. It's moving slowly because it's building something bigger than any single bull run. Ripple is integrating with central banks, payment corridors, and liquidity networks that take years to establish. The work is invisible until it's suddenly everywhere. When those systems go live, there won't be an announcement. There won't be time to react. The switch will flip and the market will reprice instantly. That's how systemic change happens, quietly then all at once. The investors who held through that quiet phase will be rewarded. Those who gave up early will realize too late that the foundation was the signal all along. The third mistake XRP holders make is not understanding utility-driven valuation. People still measure XRP's potential the same way they measure speculative tokens, by market cap and past price movements. But XRP's true value isn't tied to its market cap. It's tied to the volume it moves. Once institutional corridors start settling billions daily through RippleNet, XRP's price won't rise because of hype. It'll rise because the network will need it to. Liquidity has a price, and when global institutions depend on that liquidity, the market has no choice but to revalue the asset that powers it. Here's where most investors go wrong. They expect XRP to explode overnight. But real wealth creation in systems like this happens in cycles of disbelief. First, the world ignores it. Then, it doubts it. Then, it quietly adopts it. Then, it suddenly depends on it. XRP is somewhere between phase 3 and 4. It's no longer a question of if, it's just a matter of when. And that's why emotional trading is the fourth big mistake. Selling because of price boredom or fear is the easiest way to destroy a position that took years to build. The people who sell early don't realize they're handing their patience to institutions who know exactly what's coming next. Look at what Ripple has done in the past 18 months alone. They've expanded partnerships into over 70 countries. They've secured licensing in Singapore, Dubai, and Europe. They've integrated with central bank digital currency projects in Asia and Africa. They've built relationships with major financial players who are quietly preparing for the new liquidity era. None of this is speculative. It's structural. Every step Ripple takes builds a stronger case for XRP's future relevance. And yet, the average investor is still watching the daily chart instead of the roadmap. That's mistake number 5. Short-term focus blinds you to long-term inevitability. Traders chase 10% moves while ignoring 10-year transformations. XRP isn't just a digital asset. It's a bridge between two financial eras. The old system of SWIFT messaging, pre-funded accounts, and multi-day settlements is collapsing. The new system of real-time settlement, interoperability, and digital value exchange is rising. And the bridge between them is already built. It's XRP. Another huge mistake XRP holders make is not recognizing the power of patience and network adoption. Every major financial revolution takes longer than people expect. The internet took 20 years to reach mass adoption. 15. Blockchain infrastructure is only in its first decade of institutional acceptance. Ripple isn't late, it's early. But investors forget that. They confuse time with failure instead of preparation. And that's dangerous because when you misunderstand timing, you miss opportunity. The time to position isn't when the system is live. It's when it's building quietly in the background. The seventh mistake is believing the market will announce when to act. It never does. The biggest moves always happen in silence. When Ripple locked 55 billion XRP into escrow in 2017, it looked like a restriction. In reality, it created transparency and trust for institutions. When they acquired Metaco in 2023, most people ignored it. But that move positioned Ripple to handle institutional custody for tokenized assets globally. That's not noise. That's infrastructure being assembled right in front of you. And here's another one, comparing XRP to Bitcoin. They serve completely different purposes. Bitcoin is a store of value. XRP is a bridge for value. One is built for scarcity, the other for movement. Trying to compare them is like comparing gold to the internet. They both matter, but for different reasons. When you understand that, you stop worrying about which one performs faster and start realizing why both will coexist in the new economy. The next mistake? Ignoring on-chain signals. Most investors never check the ledger. They don't look at how supply moves, where liquidity forms, or how exchange wallets behave, but that's where the real story lives. When billions of XRP shift off exchanges, it's not whales dumping, it's consolidation. It's preparation for the corridors that will need that liquidity later. Ripple doesn't move supply without purpose. Every token has a destination in this architecture. Watching those flows tells you more than any headline ever could. And then there's the psychological mistake, forgetting why you invested in the first place. When markets move sideways for too long, people start doubting their conviction. They forget the research that brought them here. They forget the fundamentals. But the truth is, every cycle tests conviction before rewarding it. The ones who understand that this isn't about hype, but about patience, are the ones who win in the end. Because conviction, once shaken, is often transferred to those with stronger hands. Ripple's mission hasn't changed. It's not chasing fads or rebranding every month like most projects. It's laser focused on one thing, revolutionizing global payments. That's a $1 trillion mission, and it's happening whether retail traders believe it or not. The proof is in the partnerships, the licensing, the compliance wins, and the regulatory clarity Ripple has already achieved. XRP isn't fighting for legitimacy anymore. It has it. What it's waiting for now is scale. Here's the irony. The quieter Ripple becomes, the closer it is to activation. Because when a company shifts from building to integrating, the noise disappears. They stop marketing because the product is about to speak for itself. That's where Ripple is right now. The integrations are being finalized, the corridors are ready, and the institutional frameworks are in place. The system is waiting for one thing, synchronized adoption. Once that happens, there's no going back. Another critical mistake XRP holders make is underestimating the role of regulation. Many investors still treat regulation as the enemy, when in reality, it's XRP's greatest ally. Ripple has spent years fighting for legal clarity, while other projects tried to dodge it. The lawsuit with the SEC wasn't just a setback, it was a purification process. It separated speculation from legitimacy, and when that ruling finally confirmed that XRP itself is not a security, the entire framework changed. That decision didn't just clear Ripple, it set a precedent for the industry. But what did most people do after the news? They celebrated for a day, then went back to waiting for price action. That's mistake number 10, not recognizing the magnitude of milestones when they happen. Regulation is the key that unlocks institutional money, and institutions don't chase hype, they follow compliance. Ripple now operates in more licensed regions than almost any other blockchain company. The rails are cleared. What remains is activation. When that switch flips, liquidity will move in seconds, and by then, the window for positioning will be gone. Another mistake, trusting headlines more than data. Mainstream media thrives on speculation and fear. One day they'll praise Ripple's innovation, the next they'll question its survival. But those narratives don't matter. What matters is what's verifiable on-chain and in corporate filings. Ripple's quarterly reports show continuous growth in on-demand liquidity volume, real usage, real corridors, real institutions, that's the proof. Yet most investors spend more time reading FUD tweets than analyzing facts. They let emotion drive decision-making, forgetting that markets are psychological warfare. The strongest investors aren't the smartest, they're the calmest. They see noise for what it is, distraction. Here's another one, failing to understand liquidity psychology. When the market is quiet, people assume nothing's happening. But in liquidity-driven systems, quiet means absorption. The network absorbs shocks, consolidates, and prepares for its next expansion phase. XRP's price doesn't need to move dramatically right now because it's not in a speculative cycle, it's in an infrastructure cycle. The foundation is being finalized. The corridors are sinking. That invisible phase is the most critical part of any market evolution. By the time volume appears on chain, it'll be too late to react. 13 mistake. Thinking retail controls the timeline. XRP's next move isn't waiting for influencers or social trends. It's waiting for institutions. The very design of RippleNet is enterprise grade. That means timelines are set by banks, central banks, and payment providers, not by crypto Twitter. If you base your expectations on social media cycles instead of regulatory cycles, you'll always feel early but wrong. Understanding that difference separates investors from speculators. Then there's the mistake of selling conviction for volatility. Every cycle shakes weak hands. Every dip feels like disaster. But every major asset that changed the world went through the same psychological test. Apple fell 80% before becoming the world's most valuable company, 90% before changing global commerce. XRP has been written off more times than most assets could survive. And yet, it's still here, expanding, building, and integrating. If it were irrelevant, it would have died years ago. Survival itself is proof of strength, and strength in markets always precedes recognition. A quieter mistake, but maybe the most dangerous, is underestimating what repricing really means. Most think it means a quick pump, but in liquidity-based assets, repricing is structural. It happens when utility finally surpasses speculation. Imagine a world where XRP settles trillions daily across banking networks. Each transaction increases demand for efficient liquidity. The system can't function without higher value per token, so it self-corrects. Price adjusts to meet operational necessity. That's not wishful thinking, it's economic inevitability. If the system needs XRP to be worth more to work smoothly, it will become worth more. The market has no choice. 15 mistake, forgetting what phase we're in. We're no longer in the is blockchain real phase. We're in the how fast can it scale phase. Ripple is already inside the doors that most projects are still knocking on. They're working with central banks, regulatory bodies, and payment networks that will shape the next 50 years of finance. Investors who don't grasp that shift will waste energy chasing short-term narratives while missing long-term transformation. And then there's a mistake that no one talks about, failing to mentally prepare for success. Everyone wants XRP to rise, but few have thought about what that means. If XRP reaches double or triple-digit valuations, it won't feel like a smooth victory. It'll come with volatility, fear, and headlines that make people question everything. Those who aren't mentally prepared will sell into the first spike, only to watch it keep climbing. Financial success tests discipline just as much as financial struggle. Knowing when not to act will be just as important as knowing when to act. Another trap is assuming history will repeat itself exactly. Investors look at old XRP cycles and expect the same pattern. But this time, fundamentals are completely different. Regulatory clarity, institutional demand, and utility integration have changed the landscape. The next move won't look like 2017. It'll look like the moment the world finally realizes XRP isn't a crypto, it's financial plumbing. And by then, prices won't climb gradually. They'll jump structurally. 18, failing to zoom out. Retail often forgets that the goal isn't to win every trade, it's to win the transformation. XRP's purpose isn't short-term speculation, it's long-term participation in the global liquidity framework. When trillions move through this system daily, the few who held will own the bridge. They'll be the ones positioned before the crowd arrived. That's the essence of asymmetric opportunity, seeing what others can't because you looked one level deeper. And perhaps the final mistake, underestimating silence. Ripple's silence lately isn't a sign of weakness, it's a sign of execution. The louder the noise from skeptics, the quieter Ripple becomes. Because once you're building with institutions, press releases turn into NDAS. Quiet is confirmation. It means things are moving where cameras aren't allowed yet. By the time announcements come, integration will already be done. That's how institutional adoption always works. So here's the takeaway. The biggest mistake XRP holders can make right now isn't selling, or buying late, or missing the next bull run. It's misunderstanding what they're part of. This isn't a get-rich-quick play, it's the foundation of the next monetary system. Those who treat it like a hype cycle will be shaken out before the revaluation. Those who understand it as infrastructure will realize this is the accumulation era, the calm before the flood. Ripple has already done the hardest work. Legal clarity, institutional credibility, global licensing. The rest is timing. Every investor faces a decision, trade emotion or trust logic. Emotion says, it's been too long. Logic says, the infrastructure isn't even live yet. Emotion sells in boredom. Logic accumulates in silence. The people who stay logical now will be the ones everyone calls lucky later. But luck has nothing to do with it. It's awareness meeting patience. So if you're holding XRP, don't make the mistake of losing conviction right before validation. Don't mistake quiet for stagnation. Don't confuse regulation with resistance. And above all, don't let fear rob you of the position you built when the world wasn't paying attention. Because once the system flips, it'll move faster than anyone can react. By then, the opportunity will have moved from hands that doubted to hands that believed. Ripple isn't building for speculation. They're building for inevitability. And inevitability doesn't need hype. It just needs time. Your job as an investor is to give it that time. Because when the world finally connects the dots, it won't ask whether you traded the dips. It'll ask whether you were there before the switch flipped. This is crypto equation reminding you. In every revolution, disbelief comes before recognition. Stay patient, stay focused, and never forget. The hardest part of holding is often the moment right before history changes. I'll see you in the next one.